Now we can start.
So I'll let everyone in now. We
Yes,
Yeah.
have
I think
28
we
participants.
could pause for a moment and then, Akhil, after 1 or 2 minutes, we can start. We're already close to 30 people now.
Hmm.
Yeah. Okay. Good luck, everyone.
Honey, just one second.
Yeah.
You'll keep track of how many internal, how many external, because a lot of staff also I'm expecting on this.
Yes, yes. I'll do that, sir.
You'll have the list, right?
Yeah,
Participant
yeah.
list?
We'll have the attendees list later on.
Okay, okay, done. Thanks.
And
Okay.
also
Luck.
be on standby for polls.
Yes,
You
I
know,
am
right
here
now you
only.
have.
I'm
Yeah.
here for the whole webinar.
All right. All right. Thank you.
Okay.
Okay, thanks.
So, hi, good morning, everyone. A warm welcome to today's webinar, which is hosted by the compliance team at HLB HAMT. Our session today will be an insightful exploration of anti money laundering and counter terrorism financing compliance, which is for designated non financial businesses and professions, with a focus on the real estate and dealers in precious metals and stones sectors mainly. And we'll be sharing a practical guidance on customer due diligence, along with strategies to build stronger, more effective compliance frameworks in line with regulatory expectations. So, joining us are two outstanding speakers. So, firstly, I would like to invite Mr. Raghunath. He's our Director for Internal Audit and Advisory Services at HLB HAMT. He heads the Internal Audit and Risk Advisory team and has worked with clients across a wide spectrum of industries ranging from manufacturing and retail to real estate and financial services. And we have Mr. Akil Ahmed Asif. He's the lead consultant and of AML advisory services. Akil has worked extensively with regulatory bodies and financial institutions, providing guidance on AML frameworks, delivering training, and helping implement robust transaction monitoring solutions. And I would also like to say that he's got a deep understanding of regulatory requirements in the United Arab Emirates and international AML regulations. And Akil also provides strategic insights to help organizations strengthen their compliance posture and reduce financial crime risk effectively. So they'll be walking us through key compliance insights and action takeaways. And a few quick housekeeping notes that I would like to share right now is that we'll be conducting interactive polls during the session. So we encourage you to participate and share your inputs. So we encourage maximum participation for the polls so that it would be very useful for us to, give you a much more deeper understanding. And you can post questions anytime in the question and A section, and we'll take them up during the interactive segment at the end. And this session is being recorded, and the link will be shared with you post the webinar along with the PPT. So now let's get started. And I would like to invite our first speaker, Mr. Raghunath, to take us through the opening segment.
Thanks a lot, Teresa. I think thank you for the introduction. And thank you all for joining us. We are hoping that this session will be very informative and useful for you. Uh, so, just to start with, I just want to take you through the regulatory context of AML CFT. So, basically, this under anti-money laundering and countering financing of terrorism, the main we are here in this session, we are focusing on DNFBPs, which is basically the sectors which are including the real estate, corporate service providers, dealers in precious metals and stones, auditors and law firms. So that's the regulatory context. So then if you look at the overall AML context, the regulations were initially enforced across the world and later on and in the UAE as well on the banking sector, on the financial sector. So this includes banks, exchanges, and at some point insurance companies also came into the picture. As the next step, basically, this is the Federal Law of 2018, the UAE Federal Law 20 of 2018, and the Cabinet Decision of 2019, the Cabinet Decision 10. DNFBPs were brought into the fold. So when it came into the DNFBPs, so basically we are talking about the real estate and all the sectors which we mentioned. There has been an enhanced focus on these sectors. And in 2024, there was a national risk assessment conducted in the UAE. After this, the focus there has been certain changes and certain impacts on how DNFBPs are being monitored. So we would like to cover specifically on these sectors. We are not focusing much on the financial sector at this point because this session largely we are focusing on the DNFBPs. And what we hope to deliver to you, okay, from today's session is we would want to give you a practical customer due diligence guidance. So what is customer due diligence? It is all the due diligence that any entity should do before they onboard a customer, during the course of the transaction, and at subsequent stages, which my colleague Akhil will take you through. So we will give you some guidance on that. We will also give you some sector-specific risks and regulatory expectations. So, for example, the risks that apply to a real estate service provider or real estate company is quite different from the risks that apply to an auditor, for example, or to a law firm. So the real estate is more into actual at the transactional level and at the onboarding level, there are several things. While an auditor is actually authenticating certain transactions and certifying this in front of the regulators. So the kind of the kind of risks are quite different and the kind of compliance requirements are different. Though essentially the focus is all on making sure that the compliances which are pertaining to the AML CFT regulations are adhered to. So that is so there are a few variations. So DNFBP is not one homogeneous piece. It's split into different changes across sectors. And we will also want to just to be a bit informative on real life case studies. Okay, there are some real life case studies where there have been regulatory implications on different organizations, and what have been these case studies? What are the lessons that we as business people or as people in the industry should learn from these things? We also try to we've got some polls and all of that in between, so where we would like to get your views on certain areas, and also to understand how much you have learned from this webinar, hopefully. And can we move to the next slide, please? And just a small brief on how HLB HAMT supports you, but because these are all the requirements that typically any DNFBP would need to have. Apologies, it's not in the exact sequence, but yeah, we would start somewhere in the center with your Go AML registration and the financial institutional intelligence unit onboarding. So that is one part that it starts there. Then you have other functions like your AML CFT framework, gap analysis, procedures, AML CFT customized procedures, then customer due diligence, enhanced due diligence, and risk assessment support. So these are all the areas that we look at. Staff training, for example, for DNFBPs is mandatory. So that's one part of it. Outsource compliance functions and providing all sorts of practical regulatory guidance. So these are all the advisory areas that we look at. Yeah, I'm seeing questions, so we will come back to the questions, hopefully, if the time permits, by the end of the call. If not, we have your email IDs and we will definitely connect with you. So please post your questions on the chat box. So over to you, Akhil. I think we can move on to the next.
All right. Thank you
so much, Mr. Raghunath, for that overview. And now moving on to the second speaker, Mr. Akhil. Please do continue.
All right, thank you, Trissa, and thank you, Raghu, for providing the overview of today's session, and as well as how HLB can support the clients and the stakeholders inside UAE, especially DNFBPs. And in today's session, hello everyone, we are going to understand about the requirements, which has the regulatory requirement, which has been set by the regulators for the DNFBP. So we'll see who are the DNFBPs, and also we'll emphasize as to why we have conduct the targeted webinars for these sectors, and also we'll be taking into the deep dive into the requirement of a customer due diligence, also the risk assessment, and which has been conducted by the national authorities, and what are the outcomes and how it implies as a DNFBP to our sectors. So before we could go into the due diligence framework, we will just go back and see the AML context from the international and global standards, as well as from the UAE laws and regulations. So first here we will see the AML background, anti-money laundering and terrorist financing background, and it context from where it started. So FATF standards are FATF is the international body which has been set to set the international or global standards inside the universe to fight against money laundering and terrorist financing, and it sets the recommendations which are called as which you can also take as guidances, or you can take as standards for the implementation of or fighting against money laundering and terrorist financing. So that is the role of FATF. Not only that, FATF also evaluates the countries in their evaluation. Mutual evaluation will be conducted by the authorities to assess their AML CFT frameworks, whether the DNFBPs, whether the financial institution inside the country has properly performed their due diligence and applied their AML CFT frameworks. This has been checked by the FATF every every 10 years for each of the countries. However, if just to see and provide an overview of the UAE's evaluation, UAE has underwent inspection or evaluation by FATF in 2019, and then the report was published in 2020. That was the first evaluation by the FATF for UAE, and subsequently there were subsequent evaluation which has been conducted by the authorities for the FATF mutual evaluations. So, talking about the FATF standards, here we have 40 recommendation or standards which are being set by the regulators in terms of fighting against money laundering and terrorist financing. Here, as we focus today on customer due diligence, so we have focused recommendation provided by the international regulator, which is recommendation or guidance 10, recommendation 12, and recommendation 15 by the FATF, which is the most important guidances which has been given in terms of the customer due diligence and how DNFBP, designated financial business sector, what are the requirements to set in. So the first recommendation, as you see here, customer due diligence requires the firms, the DNFBPs, to identify and verify the customer and their beneficial owner. So in subsequent slide, we'll see what are the identification requirements and as per the UA regulations, and as well as who are the UBOs and ultimate beneficial owners. And mandating ongoing monitoring of the business relationship is also mandated by the recommendation 10 of the FATF standards, which mandates that a firm should, company should conduct the ongoing monitoring on their businesses, on their customers, on their clients, and on their transaction of the clients. So that was included under the customer due diligence as per the recommendation. And if you see recommendation 12, political exposed person, PEP, is has been emphasized that whenever you have any clients of a political exposed person, then you have to conduct enhanced due diligence, whether it be foreign or domestic PEPs, both including, and political exposed person, including their associate, their family members, their close associates, also are included under the recommendation 12 and the enhanced due diligence measures. Then recommendation 12 also requires the risk assessment to be conducted, whether it be the risk assessment for business or the risk assessment for the customer. So there are two types of risk assessment which has been defined by the FATF and by the UA authorities for the DNFBPs, which has to be conducted on an ongoing basis. One is on ongoing basis, which is customer risk assessment, and the other one is for the risk assessment of business itself, which has to be conducted once at least annually. So risk assessment, just a moment, I have a technical glitch. I am trying to reshare the screen.
Yeah, Akhil, I think the
Hope the
video,
presentation is
no, the video is
started.
on. You can share the presentation.
On.
Sorry.
All right. All right. Thank you. All right, so this is all about FATF, the international set body which sets the regulations and the recommendations. So now we will go and see the context from the UAE AML CFT background. So as I mentioned, the evaluations or the examinations are being conducted by the FATF for UAE itself, the country itself. So UAE have their obligation, international obligation to comply with the FATF 40 recommendations, the standards, and implement those measures inside UAE to their regulated entities. So here for that, they have set a law first. So everything comes with the cabinet decision and then with the law. So the federal law of 20 of 2018, which sets the AML CFT framework for UAE, whether it be for financial institution or it be the non-financial institutions. All the regulations are set. So it covers, as you see here, it briefly covers what are the definition of money laundering, what are the predicate offenses, what is an offense of money laundering is it covers, and what are the offenses of terrorist
Sorry,
financing.
just a
It
minute.
covers that.
Somebody's mentioned
And
that
also,
one
sorry.
second. There is somebody's just mentioned that the screen is being not being shared. Uh, I think
Right now, is it
it's
shared
just
now?
shared for me it is, but I'm just hoping for the rest of the audience. I hope it is there.
From the audience,
Yes,
if anybody
this,
could just
the
ping
screen
in if
is
it is.
visible to me as well.
Yeah, okay. Some of the people are seeing it. So apologies if you could just check again. That would be helpful. Okay, thank you all. We'll continue.
All right. So the obligation of financial institution and visiting the non-financial business and how they can conduct the customer due diligence and what are the regulatory requirement for reporting any suspicious activities are also covered in the federal law of 20 of 2018. And also it grants the power to the supervisory authorities or your regulated regulators who have the powers to fine you, who has the powers to revoke your license, who has the powers to examine your entity or conduct inspection for your entities in terms of AML CFT regulations. Then also it covers the support of international cooperation and AML CFT matters from the different financial intelligence unit with the financial intelligence unit inside UAE. And also it covers the fines and penalties for money laundering offenses and also for the terrorist financing offenses. So this law is a backbone of AML and CFT measures which a company has to oversee and implement their AML CFT measures in their company. So there is a supplement to that law which is called as cabinet decision 10 of 2019, which is nothing but a procedures which has been set by the authorities or by the cabinet of the UAE, which sets the regulations as well as the procedures for as what has to be done in a company. If it is a financial institution, what step you are required to. If you are a DNFBP, then what are the steps you are required to conduct, from onboarding to appointing a compliance officer. All those measures are mandated. And also it introduces and guides through the institutions to how you have to conduct the risk based approach and what are the steps and factors involved under the risk based approach, and how you can identify and mitigate the risk which is in relation to your businesses with your client or with while introducing a new product. All procedures has been implemented and designed in this cabinet decision 10 of 2019. And also it mandates the requirement for customer due diligence, enhanced due diligence, and ongoing monitoring. So the requirement as to when you have to conduct the simplified due diligence, when you have to conduct enhanced due diligence, it sets and what are the requirement for ongoing monitoring for a, let's say, a firm who is a real estate, a firm who is a jewelry trading company, or a auditor or advisory firm. What are the steps they need to take has been taken into consideration. And also it takes the violations and also the record keeping requirement. If any record were to keep, what are the requirement? It keep 5 years. So we'll see in detail our slides as well. So the detailed requirement for CDD. So that was about the regulations, the laws inside UAE and the international global regulators. And then now we'll see, as I mentioned, that the federal law covers the financial intelligence unit role as well. So there is a unit called Financial Intelligence Unit inside UAE, which sets the which analyzes the suspicious activities and also cooperate with the International Financial Intelligence Unit in terms of identifying the trends, typologies, and also the cooperation between the other financial institution to investigate any suspicious activities or any crimes which is relating to financial crimes, money laundering, or terrorist financing. So this body plays a role to. So for us, what we have to report to these bodies, we have our responsibility is to report the suspicious activities and suspicious transaction reports. That is the first and foremost reports which has to be reported to the authorities, the Financial Intelligence Unit. So we will be reporting that through the GoML portal, which is operated by the Financial Intelligence Unit. So GoML portal is a portal which allows you to report any suspicious activity, any real estate reports, or there are other reporting requirement. So any DNFBP designated non-financial business sector is required to register with GoML. This is a mandatory requirement which we have to, as a firm, should register. It also coordinates with the law firm and the other regulators, as I mentioned, and investigate the suspicious activities. If you like, there are 10 institutions or the firms have reported the suspicious activities. They'll review that, they'll analyze that, and if there are international transactions or international clients or the non-resident clients involved, then they'll be coordinating with their counterpart FIU in different countries, the respective countries, and investigate further to see whether this is actually a predicate crime or financial crime, the transaction, the property purchase or the gold purchase, or a transaction being conducted by a bank and a transaction being audited by auditors, being uh, involved in any money laundering offenses. Then if any outcome were to come, they, along with the law enforcement, enforce the penalties and restriction to the individuals, to the firms, and to the organizations. So that was about the background of the UAE. Now we'll see the overview of detailed overview of the due diligence and who are DNFBP. So we are saying from the first slide that DNFBPs. So let's see who are DNFBPs and what are their role in AML CFT framework as per the federal laws and the international laws. So DNFBP, that's an abbreviation which pronounced as designated non-financial businesses and professions. So nothing but these are the non-financial businesses or sectors which has been supervised and regulated by the Ministry of Economy. So your regulator, any of this fall under this category of DNFBP, the regulator is Ministry of Economy. So here, first category, the sector is real estate sector. Under that, brokers, agents, whoever, developers, all comes under the category of real estate sector. Then we have DPMS, dealers in precious metals. Anybody who is dealing retail, wholesale, gold jewelry, bullion deals, or dealing in diamonds, precious metals also, or precious stones, also comes under the sector of DPMS. Then comes TCSPs, which are trust and corporate service providers. Any company who is incorporated in UAE and providing the company formation services or providing the services uh, of managing their books or managing their accounts will be coming under the trust and company service providers. And finally, the last one is the last category or sector which comes under the DNFBP is auditors and accountants and law firms. So auditors and accountants are also obligated to comply with the regulations. anybody who is also doing bookkeeping services or accounting services, who is a small entity, and also you are providing the services of such in by maybe you are registered in free zone or mainland. Irrespective of that, you have to register and comply with the regulation, because you are falling under DNFBP category. As well as the law firms, any firm which provide the law services, legal services to any client, should be considered under the DNFBP and must comply with the regulations. So these are the sectors which mandatorily have to comply with the regulations, and also these sectors will be examined by the authorities, which is Ministry of Economy, as I mentioned. So your regulator is Ministry of Economy. Any inspection were to come will be enforced from the Ministry of Economy, Department of AML. So now, for what are the obligation? Like key obligation, we'll say there are ongoing obligation as well, and then there are mandatory first obligation, or the obligation which has to must be there in place at start of the businesses, or whenever you realize that now I do not have those. You got to know from a seminar, you got to know from a webinar, or you got to know from the notices which has been sent by the Ministry of Economy. Then you should comply at that same time and take measures and uh, implement your AML CFT measures and develop your frameworks inside your firm. So here, the first and foremost is to register with MOE and GoAML. So the first and foremost step is to register with GoAML. As I mentioned, GoAML is the uh, portal which has been platform which has been maintained by FIU, Financial Intelligence Unit. So first step is for a DNFBPs to register there. Then comes the appointment of the compliance officer. So you should have a compliance officer, dedicated person who must handle the AML safety compliance duties. So there are set of duties and responsibilities which has been set by the law, in the law, and by the inside the guidances of the Ministry of Economy, which a firm has to comply with. So the responsibility of appointing a compliance officer goes to the senior management, and because senior management is uh, the key plays a key role in developing the AML CFT framework, and they will be held responsible if any inspection comes in. Then AML compliance officer and the senior management will be called in those inspection, and then they will be held responsible. If any shortcoming from the compliance officer, they have to uh, see that they have to comply with any remediation measures which has to be applied. They need to apply inside the company, and uh, follow the instruction from the compliance officer. So appointment of the compliance officer is a must. You can appoint a person internally, you can outsource that function to outsource third party as well. So either of this you can. So if you feel that our resources have no capabilities of doing the compliance activities, due diligence of the client, and risk assessment, sanction screening, then that can be outsourced to any third party as well. So then conducting money laundering and terrorist financing risk assessment is one of the key factors. So when we say risk assessment, there are two risk assessment: business wide risk assessment and customer risk assessment. So business wide risk assessment of money laundering and terrorist financing must be conducted at the start of the business, and thereby annually at minimum. This is as per the regulations which has been set. At least minimum annually you have to conduct the risk assessment of business. And when it comes to the other risk assessment, customer risk assessment, you have to conduct on ongoing basis whenever there is a change in the customer profile, while you onboard a client, at those of and when you have trigger events, like you have suspicion, or you have some unusual transaction in the client books of accounts, then that time you have to conduct and revise the customer risk assessment. And the one more key responsibilities or obligation is providing regular training to staff. Providing training is mandatory not only just for the compliance officer and to the senior management, but also to the staff who is involved in ongoing operations, like who are involved in uh, client facing staff who are dealing with client directly, and the staff who are dealing with financial activities inside the company, and the staff who are record keeping, taking the records or the file on the documents from the clients must undergo AML training, and the training requirement also at least once in a year. All the employees must undergo training and followed by a assessment is to test the knowledge whether the employees have understand about what we have uh, presented by the compliance officer. Again, the AML training can be conducted by the compliance officer. If the compliance officer does not have those many resources or capabilities, then that can be uh, taken from the outsourced third party training providers as well. So training is a very important or crucial aspect in terms of AML CFT regulations, wherein if a training is not given to the first line of defense, then first line of defense or the client facing staff, then those of the staff will not be able to collect or verify the client identity as per the regulations. They'll be following their own regulations, or some checklist which has been given by the internal admin will be followed. So now we'll see the customer due diligence and introduction. So recently, the Ministry of Economy targeting the DNFBPs have issued the guidances for DNFBPs, stating that you should implement the customer due diligence more intensively, because previously they have conducted inspection, like from the year 2022, 2023 and 2024. They have conducted various inspection in the real estate sector, jewelry, accounting, advisory, and corporate service provider, and they saw that the steps or measures which has been taken by the authority, the regulated entities, are not to the mark. So that's why they have asked to the regulated entities to strengthen their customer due diligence measure, which are CDD measures, in terms of onboarding, in terms of monitoring or reviewing. So we'll see what is the purpose, why the government or the authorities are asking us and sending the regular circulars, and also penalizing the entities who are not conducting the customer due diligence intensively. So the purpose of the customer due diligence is to verify the customer identities. Identify and verification is very important and crucial step in the due diligence process. When you say know your customer, that means you have to identify the customer and verify the customer. Two steps, that's a basic first and foremost step which has to be followed: identify and identification and verification of the customer. So identification of the customer, by meeting the client, you will be identifying the client, and then we have the verification. You verify the client identity, whether it's valid, whether the documents are being provided fraudulent. Those all steps will be required to cover. Then there are types of due diligence, which is we will see in other slides, coming slides, wherein simplified due diligence, standard due diligence, and enhanced due diligence are three types of due diligence which has to be followed in different scenarios. Of course, as I mentioned, risk assessment is also one of the a crucial part of the due diligence measures. So now we'll see some summary of fines, or by seeing one case study, and also we'll see what is the summary of the fines or the penalties imposed on DNFBP by the Ministry of Economy during until 2023 and 2024. So Ministry of Economy and Tourism imposed fines worth 22.6 million on 29 companies. It includes the DNFBP sector, which includes real estate companies. It includes the law firms. It includes accounting and advisory firm. It also includes the dealers in precious metal as well. So including all this 29, what you see, they all had not complied with the AML CFT regulation, and the ministry found 225 violations, wherein violation as in findings which has not been complied by the regulated entities, by the real estate sector, by other sectors. And for the on the outcome of that, ministry has fined 22.6 million dirham on 29 companies, and some companies licenses were revoked, and some companies have been warned to comply with the regulation, and then they have asked to comply and take the remedial actions to take necessary measures. So this is why it is important for us to, before any fines could come or any inspection were to come, it is very much important for our sector, DNFBP sectors, that we should comply, we should implement the measures as we see today, and implement ongoing measures as well. So one of the example here, the case study of wherein a real estate company was fined 1.8 million for not registration and not reporting STR via the portal. So no compliance officer or no AML policies were there. So first, as the foremost important thing, they have not registered with the Go AML, that they have fined. Then there was fine for not appointing a compliance officer, whether it be internal or external, nothing was there in place. Then there was no reporting of suspicious activities from them. There was suspicious transaction, but the real estate company failed to report that because there were no measures for identification. Thereby they failed to report, and authorities later found that there was transaction which has been suspicion, but the company had failed. So for this company, 1.8 million fine was imposed, and 90 days remediation plan was given by the authorities to comply with the regulation strictly. And what are the lessons which we learned from this? Like, as we talk about penalties, as we see there are findings from the regulators, and the remediation action was given. So lesson learned here is, we as a regulated entity, at any given point of time, we got to know that this is my regulatory obligation. I should register without any fail, or without sparing more time or taking time, that thinking, okay, Ministry of Economy has not yet come for the inspection, so I'll take more time and then register. So you sometimes company sees the cost involved with the policies development, which has been provided by the third party consultant. Then later on they pay fines. So to avoid anything, we have to comply with the regulation as soon as possible whenever we have got knowledge on the regulations. So when is CDD required? Customer due diligence is required at various occasions, not only just at onboarding. So here we have instances wherein new business relationship, whenever you have a new deal, new transaction with a client, you have to conduct the customer due diligence, verify the client, their sources, their purposes of the transaction. Then occasional transaction, which is of 55,000 and above, any occasional transaction client is conducting and appearing or approaching to you, again, that time you have to conduct the due diligence measures. Suspicion on money laundering and terrorist financing offenses. You feel something wrong or unusual in the client transactions, be it the payment mode, be it the KYC forms or the identification documents provided or the supporting documents provided. That time you have to report the suspicious activity. Dot on previous data accuracy. What the previous data which has been submitted, now the client has been submitting different data or different documents which is contradictory to what they have submitted previously. In those time also, we have to implement the measures and ask the client to provide the supporting documents and uh, complete our due diligence. Of course, here everyone plays a role, starting from the client facing staff, who the person who is dealing directly with the client, be it a broker in the real estate, be it a person in jewelry sector who is directly dealing with the client, or a person account executive who is directly handling with the client in law and accounting firm. It's everyone duty, and also as well as compliance officer duties to investigate those suspicious activities. Identify and verify, as I mentioned, that is all what we have to do. Confirm authorized representative. If any representative or any third party involvement is there in that, then you have to uh, verify those. No dealing with shell companies. If you found that shell company is nothing but a company which has licenses but there are no operations, if you investigate, that you see that there are fake invoices being generated, they have that the license has been taken, and there are no operations in the business, then those are called a shell company. So we are not supposed to deal with those companies. It is prohibited to deal with them. Understand business relationship and their purposes. Monitoring the transaction is very important.
Excuse me, Akhil, I think we are getting a few questions. So I'm not sure
Okay,
if we have enough time to, answer them now. So I'm just,
we'll take up at the end of the.
yeah, but I think we might need to speed up a little bit. So maybe if we can,
Yeah, yeah,
make
yes,
that.
yes, yes.
So there are a few questions. We'll try to answer as much as possible. There are a questions on
Sure.
few questions on software, which we will probably get back to you directly on. But things regarding procedures and other clarifications, we will try and address it here itself. Thank you.
Yes, yes, definitely. All right. So, customer due diligence for legal person. Legal person is nothing but entities. When you are onboarding an entity, when you are onboarding a corporate company, then you have to identify the customer itself and also the ultimate beneficial owner. Anybody who is holding 25% and above shareholders in a trade license, if you see, then you have to collect the identification document of those partners and collect the memorandum of association and article of associations and identify their identities. So this is what steps which has to be conducted for the legal person or arrangement. Arrangement is nothing but if you onboard a trust or a trust service provider or a foundation, then those are called as arrangements. So here we have first quiz or poll where, like, just to keep this session interactive and to test even your understanding, we have kept the poll. So, Honey, you can just start the poll. So please, you have one minute time to answer the poll. Take your time and answer this.
So as Akhil said, please do poll your answers. So we have two questions. So I hope you're done polling. Thank you for your response.
All right, then so moving forward to timely customer due diligence and non-compliances. As I mentioned, there is a reporting requirement. You have the timely due diligence whenever you are onboarding, not that you are taking that this is the requirement just to fulfill the regulatory requirement, but the obligation is to conduct the due diligence only before conducting the business transaction. Not that you will conduct a deal, let's say you have a purchase deal for a gold or a deal for buy and sell for a real estate, then after facilitating the deal you are taking the KYC, it is not permitted. You have to conduct before facilitating any deal, and if any STR, you have to file it, suspicious activities to be filed. So while you conduct ongoing customer due diligence and monitoring, what are the obligations? So review on customer risk. So ongoing monitoring is important for all the DNFBPs because we have to verify the client trends, their sources, their purposes of the transaction. If any transaction is not in line with their businesses or in line with their source of funds, then we have to investigate that and ask more questions or conduct more due diligences on those particular transactions. So risk based on customer risk, you have to review the customer risk assessment and see if customer risk rating has changed. Update the KYC regularly. Watch your red flag. So there is a requirement from the Ministry of Economy that every entity should implement red flag indicators and should be circulated to the first line of defense, the client facing staff, and to the compliance officer to identify any suspicious activity. And trigger enhanced due diligence for any high risk cases. If you feel the compliance officer and the first line, the client facing staff feel that there is something high risk involved in the transaction, it should be triggered and EDD to be conducted. So As I mentioned, there are 3 steps in customer due diligence. Simplified due diligence has to be conducted for low risk client or customers only, which you identify the customer risk assessment. And talking about customer risk assessment, how you will be conducting it, you will be having online tools, or you can go for Excel based tools, which will give you automated risk rating for the client. Just by when you enter the risk rating, it will give you the overall risk rating of the client with the predefined risk factors. So if you have any clients low risk, then you can conduct the simplified due diligence. So it is only mostly it will be for listed companies or the regulated government owned entities or semi government entities. You can apply those measures, wherein you will be reducing your monitoring and other KYC checks. Then enhanced due diligence. So we saw customer due diligence, we saw simplified due diligence, and now the third step is what is enhanced due diligence. Enhanced is nothing but to intensify or to add your due diligence measure in terms of collecting the documents. So here for whom we have to conduct the enhanced due diligence. The first is for high risk customers. Whenever your risk assessment says that the client is high risk, you have to conduct high risk customer from the risk assessment, and as well as for the political exposed person. From your screening results, if you found a client is 100% political exposed person, that time you have to conduct the risk assessment and enhanced due diligence. So the steps for enhanced due diligence are obtaining additional documents, which is nothing but source of fund documents, purpose of transaction documents, and asking the source and of wealth, like maybe the bank statement, maybe the client said the sources are from my business income, those can be supported taken, or the client said it is from my inheritance or sale of their properties. We have to collect the supporting documentation for that. And the last step is to take the senior management approval before proceeding with the business relationship for the high risk clients. It is very much important. Customer due diligence for high risk jurisdiction also. Whenever you have any client from high risk, like non-resident and high risk, from the high risk jurisdiction, which has been defined by the FATF. So currently there are 3 countries in high risk list, which is Iran, North Korea, and Myanmar. So any nationals non-resident, if you see from these countries, then you have to intensify your due diligence measures. So apart from customer due diligence measures, as you have collected the customer documents, you have the requirement for screening, and also you have the requirement for risk assessment. So screening is nothing but sanctions name screening of the client to identify the client, whether he is listed in international sanction list, or he or she or a organization entity is listed in under the local UA list. So we have obligation. This is a regulatory requirement. You have to subscribe a tool, online resources. There are so many tools available in the market which you have to subscribe, and your obligation is to screen against United Nations Security Council, which is UNSC list, and UAE targeted financial list. So this against this two list, we have to screen the names of every client, all the ultimate beneficial owners, or any person we screen on board. Use screening and resolve, like you need to see, the compliance officer need to see whether the screening is appropriately done, and if there are no matches, then if there are matches, then there is a requirement to report to the authorities via the fund freeze reports. So having said about the transaction due diligence, customer due diligence, and covering the requirement for reporting. So as I mentioned, regulatory reporting is required whenever you have any suspicious transactions. While you report, and or after you report, or while your compliance officer or your senior management is investigating into one client books of account or one client's transactions, then that is not to be tip off. Not, you are not supposed to disclose the information to the client that something is going on. Maybe you are first line of defense, the client facing staff, you are concerned about your commission, or you are concerned about your client that you may lose, and then accidentally you might disclose the information that something is investigation is going in his book of account. So it is prohibited. You should not do. Anybody in the company, be it senior management, compliance team, or the operations, must not tip off. So there are fines for tipping off as well. Then there is a requirement for record keeping, which is for minimum for 5 years. We should keep the records, at least minimum, all the records, whether it be for the KYC records which you have obtained from the client, or your training records, or you have reported any suspicious activities via GoML portal. Those records you have to keep. Risk assessment you have conducted, any enhanced due diligence which has been done, all records has to be kept for 5 years at minimum. So let's see now the case study we have here. So to just see what how previously money laundering and terrorist offenses was conducted by the criminals, and how that was investigated by the authorities. So there was a trade-based money laundering offenses or crime which was conducted via the real estate and luxury goods. So as per the national risk assessment which has been issued by the authorities, this is the case study which says that there was a launderer who, there are group, you can say network of people who have laundered the funds using the real estate and luxury goods. Luxury goods includes the jewelry, including the other luxury cars and assets. So here we see here 2023, in 2023 there were 7 individuals and 4 legal person. Legal person is nothing but companies which are registered under UAE, were prosecuted for their role in trade-based money laundering scheme involving 1.106 million AED. So the funds were wired from foreign jurisdiction to UAE. They have transferred the funds, the criminal funds or proceeds of black money to UAE, and to UAE based account specifically. The funds were used to buy luxury vehicle and property. So here the funds has been derived from the criminals. They have used to purchase the luxury vehicle, luxury jewelry items, and properties as well, real estate properties. So why the real estate companies have failed to report here? Because they were not having the proper due diligence measure in place. That's why the real estate companies were failed to identify their sources. Vehicles, as I mentioned, there were vehicle also purchased, luxury vehicles. They have exported using under invoice custom documentation. So they have used under invoiced using less price of what has been actual price, and custom those from the customs. So how it went? FIU, Financial Intelligence Unit, as we see, they are the authorities investigated. After investigating those companies which have facilitated the transaction, which are real estate companies, there was one shell service provider also who have facilitated to incorporate a company which is shell company only, and then they didn't ask any documents. And dealers in precious metal stone, which has facilitated the jewelry trade, but they have not requested any supporting source fund document for those of million of transaction. Thereby, they failed to report the suspicious activity. But later on, financial institutions, financial intelligence unit found that this authority, the entities failed, and then there was a money laundering crime happened inside UAE. So then the criminals were sentenced to 7 to 10 years prison, and there was fine of 71.5 million dirhams for, and license revocation to this real estate entities, real estate and the DPMS entities who have facilitated the transaction. So from this case study, the takeaway is we have to be vigilant at the point of onboarding the client. We have to ask just not the identification document, but source of fund of the client. If you see that transaction is involving cash, or the transaction is involving value or volume, then you have to collect the source of fund documentation from the. So here we go with another poll. We'll start another poll. So please post your poll here, and then we'll proceed with further slide.
So we have 30 seconds to answer. Please do post your answers. Because right after you poll the answers, we'll be showing the answers on the screen. Thank you for your responses. We'll be
How
just
many
showing the answers
responses we
on the
have, Prasad?
poll. Yeah, we're
Okay.
just showing it on the screen.
No, I'm unable to see. You can just
It's not visible. Okay, just a minute.
yeah. You can just tell how many responses and how many are that.
Yeah, just a minute. I think you can just move on with the session because we'll show
Yeah, yeah.
towards the end. Yeah.
Yes. So that will be sharing it as well. So now seeing key channel challenges for the real estate and other DPMS sector, like mostly we'll see also the what are the risk rating of each of the sectors. Like it is important for us to understand what are the risk rating of our sector itself and what how our product is rated by the authorities, because accordingly we need to incorporate those in our risk assessment, because this is cash heavy and informal transactions, cash intensive and informal transactions are there in the sector. And offshore customers, there are so many non-resident who are on a daily basis coming to purchase the property or to buy jewelries or to incorporate the companies, need robust records and controls. So for this non-residents or for the cash intensive businesses, it will be very challenging for or for us as a entity to maintain records and control. So we'll see how to overcome that and what are the regulatory uh, risk rating for those. So now national risk assessment has been results has been issued by the authorities, which is which is being conducted by the national committee and also in coordination with the central bank and as well as the Ministry of Economy. These results were out in May 2025 and they have conducted the risk assessment until 2024. This activity is conducted every 3 years. The national risk assessment will be conducted. Last they have conducted in 2021, 2022, and then now they have uh, conducted in 2024, and the results are out. So we'll see what are the implication on DNFBPs only. We will not go through the financial institutions because we are targeting now DNFBPs. So the risk assessment result says that the sectors and the supervisors. So there are 16,000 DNFBPs altogether, as we see all sectors. Ministry of Economy are their supervisors, including in mainland and whether it be in free zones, commercial free zones. Everyone is operated, supervised by the authorities. And Ministry of Justice is the key regulator for notaries and lawyers only. DFC and DFSA is the free zones authorities, which has been financial free zones, you can say, which is not coming under the Ministry of Economy, for the overview of the national risk assessment. So if we say there are 16,000 DNFBPs which are regulated by the Ministry of Economy. The first and foremost, we'll see the risk rating and then implication on the real estate sector. The real estate sector is considered the money laundering and terrorist financing risk is considered as high because there are cash transaction involved in the real estate. There are luxury property deals which has been facilitated by the real estate brokers and the developers. Third party purchases, they are third party purchases. They are intermediaries who are purchasing for the third parties or their family or their immediate associates. Concealment of beneficial owners, they are concealing or they're hiding the source of their beneficial owners. Like if a person is purchasing a property, he is appointing a middleman, a proxy or intermediary, and then thereby he is trying to purchase property on his name. Due to these reasons, these four main reasons, real estate is considered as high risk sector, and the product real estate buy and sell is also considered as high risk. So what, as a real estate sector, what I need to do, I need to revise my risk assessment, which is business risk assessment. Now the authority says everyone should revise their business risk assessment and incorporate this threats, this high risk engagements of what has been implemented by the authorities. And also conduct the enhanced due diligence. So first step is to revise the business-wide risk assessment, reconduct the business risk assessment, enhance their due diligence measures, enhance the measures for STR and suspicious activity reporting. Then comes the dealers in precious metal stone is considered as medium high, again because of cash intensive and data discrepancies. They are also considered as medium high. And comes to corporate service provider, medium risk assessment has been given to them, that they are not that much exposed to the money laundering risk, but they have given medium risk. It doesn't mean that you are not supposed to comply with the regulations, but you have to keep moderate measures as per the regulations. While the real estate sector and DPMS, dealers in precious stones, they have to intensify their measures. And comes the auditing and accounting firm, which is considered as low risk, and law firms are also considered because they are not exposed by the money launderers. They cannot directly facilitate any transaction because they are the gatekeepers, and directly there is no involvement of the client and the transaction between them. That's why the authorities have rated the sectors as low risk. So overall outcome, if we see from the national risk assessment and for the DNFBP sector, it is important that now DNFBPs must conduct their business wide, revise their business risk assessment, or if anybody have not conducted until now, you should act upon and conduct now. If you do not have resources, appoint third party and conduct it. KYC and due diligence measures by the compliance officer, suspicious activities reporting is the key outcomes wherein they feel that these are the partial effective, wherein you have to take more efforts in this. Limited awareness of DNFBPs. DNFBPs are not have knowledge or resources to understand the AML obligations. That is why also they are not applying the measures. So these are all, as I mentioned, staff training is also important for at least annually, and for compliance officer, ongoing training has to be conducted. Timely and accurate reporting is also important. Not just you're having a transaction, you have a obligation to report cash transaction, which is of cash and virtual currency transaction for real estate sector, which is of 55,000 and above, have to be reported. Even DPMS sector. So one more case study we have just after the national risk. So the key outcome, what we take from the national risk assessment is authorities are still concerned and are asking the entities to develop or to revise their frameworks, to revise their business-wide risk assessment. Now after the outcome of the national risk assessment, so everybody who do not have the risk assessment in place, they should now implement those measures and conduct the risk assessment. So let's see, we have case studies, two case study here, again for money laundering offenses, which has including the predicate offenses. So there are 22 predicate offenses for money laundering, which has been defined by FATF, Financial Action Task Force. So one of them, there are two here, which is fraud and corruption is also considered as money laundering offenses. So here, use of legal person, as I mentioned, entities to launder proceeds of foreign predicate offenses in between 21 to 2023. So the companies which has been incorporated in UAE were used to launder the funds from the offshore companies. So how it was done? Entities involved. There were 3 entities involved and 11 legal entities, 3 individuals and 3 legal entities, which includes the DNFBPs and corporate service provider also involved in that particular entities. Predicate offenses, there are fraud and corruption abroad. Fraud and corruption funds which has been brought to UAE and used to facilitate via these 3 entities. AED 163 million approximately, which is come to 44 million USD through UAE entities. They have facilitated, moved the funds, they have incorporated the companies, and they have used those funds which has been derived from fraud and corruption in the UAE legal entities. which may be the companies which is operating for the manufacturing or that of the real estate or those of the DPMS, all those were used. Shell companies in free zones and mainland were used. How the mechanism was, how the laundering was done. Shell companies was used, as I mentioned, shell companies which has been just taken license and no operations. They have taken in mainland and free zones in different locations to receive funds and then transfer the money to other jurisdiction from that particular entity to conceal origins. So thereby they have placed the funds and then layered the funds from UAE and integrated the funds in some other jurisdiction. That's how with that cycle they have laundered the money laundering funds from the UAE entities. So what is the outcome? And what is the implication here for us, like what is the lesson learned here also we'll see. Conviction, fines and asset confiscations. Assets were freezed by the authorities, fines were imposed for the involved entities who are involved. As I see it, 11 legal entities, all were fined including 3 individuals. Imprisonment was like prison was given to 3 to 6 years for this individuals, and a fine of 82 million was imposed on all person, and all assets which were there incorporated for entities has been freezed by the authorities, and those of the licenses were revoked by the authorities. So the lesson learned from that is that we have to conduct the due diligence. Even if you are a corporate service provider, even you have been given as a low risk rating, you should, when you are facilitating a deal for incorporation, like you are incorporating a company on behalf of a client, at that time it's important that you should conduct your due diligence measures, identify, verify the sources as to where from they will be sourcing the funds. It is very much important. And one more case study here is gold trade sanction 2022. Using a DPMS sector, dealers in precious metal stone, a prominent gold trading company in Dubai was implicated in a large scale money laundering operation using gold transaction. So a company in UAE which is facilitating the wholesale transaction, gold transaction, facilitated money laundering transaction because they were not having robust measure in place. Why? They failed to conduct due diligence for high risk clients. They failed to identify the beneficial owners. They have not collected the identities of the beneficial owners or the partners of the companies whom they are facilitating the transaction. No source of fund or screening was conducted, and sanctions are placed under monitoring. So there were sanctions on this client. Sanction as in like a revocation of license, then they cannot do the UBOs of the company, the partners and the involved people, the compliance officer or the people who are involved in facilitating the deal, that first line also was sanctioned and imprisoned and provided under monitoring. So this is all after investigation by the authorities. So our role as a DNFBP is to be vigilant at any time of time when we are providing the transaction, or be it we are facilitating a first transaction to a client. All the time we should be very vigilant and provide the transactions. So here we have the last poll. Just we'll take up and we'll proceed further. Please go ahead and
Yes,
post your poll.
yes, please post your answers by the poll. We have 30 seconds for it. And as Akhil said, it's the last poll, and we have 2 questions.
Akhil, after the final wrap-up slide, no, the next one we can go to questions because quite a few have piled up. Maybe you can just go through them also now.
Yeah, we'll go to the.
Yeah.
So key takeaway for us to implement effective CDD measures. Integrate your KYC and tools. Like you should subscribe to the tools, or if you're not subscribing to the tools, you don't want to um, go for more resources or invest in the tools, the screening tools or risk assessment tool. You can outsource your compliance function activity as well. And then training is also important. So as we go through from for the first slide to the end of the slide, we from A to Z, we at HLB, how can we help? We'll see just in a
We
few.
can do that, Akhil, because let's go to the questions. We are already a bit late.
All right, all right.
Because we can share the presentation, right? I think we're sharing it.
Presentation will be sharing in. So
Yeah, we
as
will.
Raghu initially
Yeah,
mentioned, those are the services which we have been
yeah,
providing to our sectors, DNFBPs. So that will be. So now we'll be taking
yeah. So you can. I think
questions.
there are questions in both the chat box and the Q&A, so we can decide. The
Okay.
only one thing is all the software related queries we will contact directly because that depends on specific requirements. So in this forum, we don't want to specifically say, this software is better or what is not. So, but in terms of the other
Yeah,
questions,
yeah. Software
the other areas
other will be
we can cover that.
corrected.
Can you read out the questions, Akhil, or Teresa? Would you
Yeah.
want?
Yeah, sure. So the first question, it's related to a PEP. So if can we accept the corporate bank statement as a source of fund document? If not, what we can accept to onboard a PEP in source of fund document because client is unable to provide the SOF document.
All right. So here, first we need to understand why we are collecting this corporate bank statement. We need to see why the client is providing the corporate bank statement. If client is maybe the client is the owner of one of the legal entity which is registered inside UAE, then we need to first see whether he is a owner. So to identify that, we need to collect the trade licenses, or if the name is not there in the trade license, we need to collect the memorandum of association or share certificate to prove that he is owner or a shareholder or a partner of that company which he is providing the corporate bank statement. If you are able to prove that yes, he is the owner of the company, he like from the valid trade licenses, then yes, you can accept the corporate bank statement from the company and verify those. At we have to verify, just not collecting this bank statement is important, but to verify it is very much important, as we see, because verification means you need to see whether the client bank account has legal sources been, let's say as you mentioned, your corporate bank statement has been given. In those cases, we need to see whether there are actual business transaction into the accounts, debits, credits, then it's fine, you can accept that. In those cases where you have individual clients and then he is providing corporate bank statement, and you are unable to prove that he is unable to client is unable to prove that he is a partner, then you should not accept this corporate bank statement, but instead you should collect the other source of fund, which is his personal bank statement or his other business sources of incomes. Maybe he is earning as a freelancer, or which he has the funds which has been received from that sources. So those sources you have to collect and verify. Hope
Okay,
that
Akhil, we
answers.
have yes, thank you. And we have another question which says if a UBO holding major shareholding of a company falls under the PEP diplomat category and upon asking for additional documentation regarding PEP declaration and source of fund, for example, 3 months bank statement, client refused to provide it.
All right.
So that's
So
provide
in
the details. So what is the other options to be in the safer side?
see, while we conduct the due diligence and when you found that there is a major shareholder and also he is a PEP. So now there are two implications here. One is a foreign PEP. If you found in your screening result he is a foreign PEP, like he is a politically exposed person in any other country other than UAE, or he is not a national of UAE, then you have to collect the documents. There is no say that you cannot, or there is no say that you have another option. You must collect that. If you are unable to connect that, you should your compliance officer or your team should contact the senior management and reject the businesses of such clients. And now second option, as I mentioned, if you have a political exposed person who is a local PEP inside UAE, local UAE national who is also a PEP inside UAE, then in those cases you can apply less measures. You can identify the client identity, their businesses from their business sites, and apply less measures, like with the senior management approval. And with that, whatever the online resources you have identified, you have to prepare the EDD report stating that we have verified from the online resources and the client is a national of UAE and PEP inside UAE. Based on this, we have taken this client identification via the sources and taken the approval of the senior management. So that is important. So there are differences in identifying in foreign PEP. Foreign PEP, if the client is reluctant to provide any documents for you to comply, then you should stop the businesses, you should inform, and then also you should report that as a suspicious activity report also, because any client who is not ready to provide in genuine scenarios wherein client is having everything but not providing in those cases. Next question, Tracy.
Okay, and the next question is a DNFBP sectors can outsource compliance officer as per UAE law. So he's asking if there's a need for a house compliance officer.
Yeah, so law does not specifically says you have to have in-house compliance officer. Yes, as per the Ministry of Economic Guidance, both can be done. If you feel that we can afford and accommodate a person internally, appoint a person, then you can appoint. Otherwise, you can outsource also to the third party who will be providing the services. So both options you have, you can go for it for DNFBPs.
Okay, and we have one final question. That is, an advance payment of $100,000 should be reported or only after supply or receipt of precious metals to be reported.
100,000, that is?
It's an advance payment received for a precious metal transaction. So should it be reported $100,000? Should it be reported after receiving the material, or should it be reported at the time of receiving the advance?
Yeah, so this, as soon as you receive the, first of all, the reporting requirements start from, so if you are talking about here precious metal stones, so precious metal stone reporting requirement is DPMS. There is a report, DP, dealers in precious metal stone report, which has to be reported for any transaction which is 55,000 and above. So now you're talking about USD 100,000. Yes, where as soon as you receive the cash, irrespective of whether you have receive the delivery of the goods or the bullions or the bars, you have to report that uh, as soon as you receive that funds. Be it advance, be it the installment payment, anything, or be it a cumulative of 55,000. Let's say client paid 20,000 and then paid 40,000 again, then at that time also has to be reported. Any other
All right.
questions? Yeah.
Um, I think there's a question asking to explain what's an occasional transaction.
No, that's
Okay.
just on the. Okay, there
Okay.
are a few more on the same chat box. We'll just finish that and move to the Q&A box. Sorry.
All right.
All right. I
Yeah.
think there's not much questions then.
No, we can finish these ones. There is one question on how to onboard Iran, North Korea, Myanmar clients.
All right. So onboarding the client, as I mentioned, as per FATF and as per the UAE National Committee for Fighting AML CFT Committee, these three countries are considered as high risk. So whenever you are conducting any transaction with the high risk, automatically you have to conduct enhanced due diligence. That means you have to conduct the CDD measures, identify, verify the UBO, the client, and as well as collect the source of fund documents. So if you have a non-resident, let's say a client from North Korea, Iran, or Myanmar, and he is providing the source of fund from his bank statement from his country, then you should ask a attested or notarized document which suffice to complete the due diligence along with the senior management approval. So whenever you are onboarding these clients, the three countries clients, most especially non-resident clients, you have to conduct EDD, and as well as you have to report those reports in the GoML portal. There are specific reports which are called as high risk country reports, country activity report, and country transaction report. You have to report whenever you have any transaction with them. So the law does not or the guidance does not say for residents or non-resident, but most specifically it is taken for non-resident clients. Next.
Yeah.
All right, then I think there are not much questions now.
Last
Are
one
you able to see, sir, any questions?
Yeah, there is something. I think we'll go to the other ones because here people are still posting. The earlier ones, one on the Q&A is if you have to onboard a pet and he's unable to provide the bank statement as a source of fund document, he's providing corporate bank statement. Can we accept this?
That we answered.
Okay,
We
yeah, that,
answered.
okay,
Yeah.
sorry. Then yeah, the one which you answered, please explain occasional transaction.
All right. So occasional transaction, as in, see, the client was conducting a regular transaction with you, and for a period of time, client didn't showed up. Maybe there will be valid reasons, or there could be suspicious reason, unusual reasons also. So after a period of a gap of time, he is conducting again a transaction. That time we have to take CDD measures again, the risk assessment, screening, identification document. Again we have to comply, because maybe there is a chance that client have changed his nationalities, or maybe he have obtained a dual passport, or he have the passport IDs which you have collected previously might have expired. So because of those reasons, we have to conduct for the occasional transaction. So that's what an occasional transaction means.
Then one about validity of tenure documents. Do we need updated within 5 years from transaction? Because normally IDs get expired. So I think this is from the real estate sector, because if there is for ongoing monitoring.
So the transaction validity is, of course, we need to see the valid documents. If let's say if you are collecting a trade license for the companies which are incorporated in UAE, and you feel you see that the trade license has been expired just 20 days back, and then the client is giving the same, and they have cited the proper justification that the renewal is in under process, then in those cases, yes, you can accept that. So 28 days is a grace period wherein you can accept those documents after the expiry. After anything which is 28 days, it cannot be.
Now, just one thing, this question is regarding ongoing monitoring. So if you have an existing customer
Okay.
and if there's an ongoing transaction, so basically I think that's what it is. You can go to the Q&A question, you can just read it. So it's about, because ID gets expired. Individual IDs get expired in 2 years, for example.
Okay. So yeah. So if it is the question relates to you're talking about the expired ID of the client, if whenever it is expired, so you need to have a system in place, or you need to have measures in place wherein you have to identify the client and check the validity of the client. Where maybe if you are using on automated tool, then it should have the provision to automated provision to identify, and then that particular time you have to collect. And if you are having manual tools, then your Excel based tools or whatever you are using, you should be able to monitor those manually, and at the time of expiry you should collect.
Okay. Just even
On-
through, think there is
is there-
one, if the MLRO doesn't have previous experience in AML, is there a chance of getting a penalty for company inspection? I mean,
So, like, not directly, of course, you will get a penalty, but the regulation says the person should be having the proper resources, experiences in AML, CFT regulations, be it international regulation. Maybe you worked in some other country and you have experiences on those. Maybe you have worked previously in bank or financial institution, and then you are moving to DNFBP. Then that is suffice. But if that particular person is having nothing, and then like no experiences, or at least he or she should undergo 1 or 2 months training. If there is no past experiences, then you should take 2-3 months training from the third party consultant, and after that training you will be uh, enough able to handle that function. So then Ministry of Economy will not be having any questions or any fines or penalties directly onto these obligations.
is there anything else, Teresa, which you can see? I think.
I'm just seeing the questions. I think that's it, because yeah, I think we've answered most. I mean, all of it.
So if we do find something which we have missed out, we will be sure to
Yes.
get back to you. Okay, we have the email IDs. So we will get back to you on the mail IDs which you used to register for this webinar.
Yes. So thank you so much, Akil, for answering all the questions. And now, as we've come to an end to this webinar, I would like to extend our thanks to all of you for attending and actively participating, because your engagement through the polls and question answer session, it has actually made, the session very enriching. So, and I would also like to extend a special thanks to Mr. Raghunath and Mr. Akil for sharing his expertise. So thank you so much, everyone. And that's a reminder that we'll be sharing the recorded version very shortly with you. And so once again, thank you so much for joining us. And we really look forward to connecting with you in the future sessions. So as Mr. Raghunath said, we'll be definitely answering any questions that has been missed out via the emails, and we'll definitely connect with you. So have a great day ahead, everyone.
Thank you. Thank you everyone for joining.